Good morning and welcome to Beyond the SEAF model. I'm Jack Kosar. This is effective for the week of June 3rd, 2024. Let's get started. Utilities comes roaring back with a trading week of one, bringing it up to overall ranking of five. That was after kind of a quick reprieve from utilities. The way I've been kind of looking at this is, as you can see here, utilities is relatively defensive and technology obviously relatively offensive, and we're still kind of in this shotgun approach here that we've been seeing from managers. The overall understanding of where the market's going seems to be a little bit up and down. We had a little bit of a whipsaw week last week. If you look at some of our other models, kind of can see, especially the A6, watching the A6 on the daily health check to understand that these markets are fluctuating a little bit. And I think overall managers are confused. But like you can see here, we got signals for this week are utilities, communication services, and technology. Uh, in terms of the flows on the weekly side, you actually see a little bit of a negative outflow on technology toward the end of the week. I can note that on Friday we had a bit of a drop off and then rebound. Pretty big range day for technology, so this is definitely going to be a key place to watch as we are still in favor. It is a SEAF signal for this week, but it's sitting up at 14, and we do have a slight negative outflow on the trading week for technology. Technology really being held in by the tactical month, and as we're going to see in the heat map in a second, things are a little bit disparate in terms of the spread of flows. Utilities come in at week one at a 0.23% inflow for utilities. Keynote here is that on average inflow that we did for some testing was 0.4% inflow, so about a uh, half of an average inflow here for utilities as our top. Looking at financials dropping off as it was, a leader a couple of months ago, and healthcare rebound kind of. We looked at healthcare last week. Healthcare looked like it was up on the potentially in the uptrend, but a really strong outflow for healthcare at 0.17%. I guess is kind of taking it back down, and then surprising consumer discretionary at 2 after some weakness. Heading into our heat map, you know, we have some green here up at top at utilities and consumer services, or sorry, communication services. So we are seeing a little bit of clumping there, which is nice to see, especially with utilities rebounding. But with energy coming in at 4 and technology having 8 on the trading week, kind of flipping spots with technology at 1 and energy at 11. We got a little bit of confusion here up through the middle. Kind of greens popping through, reds popping through. Overall, like I said, we got a little bit of a shotgun approach as I think, we're in a bit of an overextended market. And broadly, my assumption here is that managers are, wanting to quick pull trigger on some of their defensive sectors, but still need to try to stay in the offensive ones in case this thing decides to continue to go higher. Um, Heading into our rainbows, communication services. We obviously we're sitting up here in this nice favorite ranking. Seeing a little bit of relative performance overall with this broadening trend in the upward direction. This pointing in the right direction. I think communication services sitting in a good spot, being relatively consistent with this flows over the last couple of weeks, is in a good place. Hopefully, to pick up some relative performance as we build some momentum in communication services. Healthcare, I wanted to show this. We kind of dipped up into this neutral. I just said, if flows continue last week, if flows continue in the right direction, this thing could head a little bit higher. Obviously, that flipped on its head for a relatively deep, actually ranked 11 in the trading week in terms of flows. So we saw, as we stalled here, we broke down for a new low in relative performance going back in the last year. Healthcare resumes to be a void, as is the worst ranked overall in the SEAF model. Looking at utilities, utilities had that little bit of a check mark into neutral that turned us a little bit sideways, and we shot right back up into favored, which is pointing in the right direction, heading into some resistance here for the relative performance. But keeping an eye on flows. I think if the confusion continues in the market, some money is going to continue to flow into utilities as these managers seemingly have to have their feet in both sides, offensive and defensive, and utilities seems to be the place to be for the defensive side of things. Looking at consumer discretionary, I brought up consumer discretionary here because of the two in the trading week after consecutive tens. But looking at the individual flows, uh, this 10 is a little bit weaker than this strategic 10, and this two, while not a raging amount of inflows, is still showing some positive direction. Heading into this neutral, seemingly turning a little bit of a corner, but like to note that we are still at a years long low in terms of the relative underperformance versus SPY. But just a place to watch. If we continue to see some money flow in and it can build a little bit of momentum, we can look to see if this is potentially a bottom for the relative outperformance. But nothing to do here yet. We are just peeking into neutral, and as I've mentioned before, one strong week on the trading week is not going to tell you anything individually. Uh, we really need to start seeing those cash flows or the flows come in from the strategic, tactical, and trading week, which is why SEAF is kind of built the way it is. So that these 1 weeks, healthcare from last week is a perfect example. Starting to see some light at the end of the tunnel with healthcare, and then the door got shut right on top. This is going to be a similar pattern here for the consumer discretionary. It's something we have to watch. No leadoffs to be taken here. Relative performance is technically pointed in the right direction, but like I said, this is a year-long low and relative underperformance for consumer discretionary. So space to watch. If we can string a couple of weeks together, we can start to build that momentum. But nothing to do here yet. I think a similar case for energy. Trading week, tactical month at 11 with a really strong 1.05 outflow in terms of energy, and we are dipping into this, heading into the favorite ranking as we scored at 4, and then that strategic quarter coming in at 1 for energy. This is a little bit of a unique situation. We have such a strong outflow in the quarter, such a strong inflow on the quarter, such a strong outflow on the month. I think that goes back to just understanding that managers are trying to hang on. I think a lot of the sector rotations are having trouble trying to keep up with the speed at which these things are rotating through their rotations. But again, similar situation, energy kind of poking up uh, with its trading week of 4 and its strategic quarter of 1, but being held a little bit back by tactical 11. This thing's going to need another week to materialize. So, we're in a little bit of a downtrend for the relative outperformance for energy. So nothing to do here yet, but just something interesting as it was a top 4 in the trading week. That is all I have for you this week. I look forward to breaking down the SEAF model with you all next week, and I hope you all have a wonderful week. Thanks.